Hello, friends. Welcome back in the series of learning the basic concepts of national income of macroeconomics. So, the today's topic is net indirect taxes. So, before switching straight away to this topic, let's talk about some background for the same. It's very much related to the functions of government. Government. Government has to go for primarily two types of functions. One is related with the growth, and the other is related with the welfare. So, how growth means things like enhancing the infrastructure of the economy. And when we talk about the infrastructure, there is lots to do in this. Like you have economic infrastructure and social infrastructure. So, without going any further in this regard, let's stick to this that for infrastructural growth and many other things, government needs to have some pool of money. Where does it come from? It comes from the household as well as the firms. As we always relate all the discussions to the two basic sectors of the economy, households as well as firms. But when we talk about net indirect taxes, these taxes are contributed by the firms, because what do you mean by the term indirect tax? The necessary levy. So it's to be paid, it's necessary. You should and ideally should not be evading it. So it's necessary levy on the production and sale of goods and services. So that's why the best example is the GST. Right, the goods and services tax. So this is indirect in nature because it can be shifted further on the consumers. So we would have all these discussions related to the taxation, the system, the type, the examples there in the chapter government budget. So just to enhance now from this point, let's see what is net indirect tax. So one aspect is how to have the money from. So the money is received by the government in form of the direct and indirect taxes. And here when we're talking about indirect taxes, it is received from the production units, right, and levied for the goods and services. Okay, and then to enhance them, to facilitate their process, right, government does give them some sort of financial assistance as well. And when this financial assistance is diverted for the firms, we call it subsidies. So when it is for households, it is some transfer payment. And when it is for the transfer payments, example again is the transfer payment for firms as well as for households. So this serves the welfare motive of the government, right? So subsidies means that financial assistance which the government gives to the production units to boost their production process. So when we say net indirect taxes, it has got two elements in this. Now, with this basic understanding, let's talk about net indirect taxes. Mind you, whenever you see net, you would have always something minus something. Whether you have net investment, net indirect taxes, net factor income from abroad, wherever you have the term net, you would have some component minus some component. And here in this case, net indirect taxes means IT minus subsidies. As I told you, IT means the direction of both the things is very much opposite to each other. Taxes are paid to government and subsidies are received from government. So you would find always the opposite treatment of IT and subsidies in all the numericals. If IT is to be added, subsidies would be subtracted. And if ITs are to be subtracted, subsidies would be added back. Right. Why this is important? Because NIT is the determining factor for balancing two things: factor cost and market price. And market price. Now, what is it? Again, this is a concept which is going to be very vital for the numericals. One was the previous one, the relationship between the gross and net investment. Here, now the second is the relationship between factor cost and market price. How do we equate them? Factor cost plus NIT becomes the market price. Now, what is factor cost? We know that for production, we need to unite all the factors of production. And what are they? They are land, labor, capital, and entrepreneur. These unite together to produce. And what is the cost? Means the returns which they get become the cost for the organization. So factor cost would be a simple sum total of all the returns given to the factors of production. Like land gets to have the rent, then wages, then interest, and then profit. So when we just total it up, this gives us the factor cost. But if we want to sell the produce which we have produced in the market and to make it legal, we have to give the government dues. So that is done by adding NIT here. It means if we have to give some dues to the government, that would be given. If government is promoting us by giving some subsidies, those would be subtracted. So NIT, add IT, subtract subsidy in the factor cost, and that would be the market price of the commodity. And market price means the price at which something is sold in the market. And it is very much legal now. Otherwise, if you are selling it at factor cost, it means you are evading the taxes. So, this topic gets to an end now with this. Let us see you again for the next concept. Bye. Have a blissful day.